Bears are winning. We had a very bad week. Good morning, everyone. This is Ahmad Saleh, and this is a weekly market recap. Now to the key messages. The Nasdaq dropped by about 3.5% last week. S&P dropped by 1%, making February closing in the negative area now, with Nasdaq closing minus 4%, the worst since April 24. And also S&P closed with a negative 1.5% in February. The year is almost flat now in the S&P. There are several reasons for this decline. First, there were some bad economic reports. Second, Trump was imposing more tariff on EU and on China, and this caused some troubles. Also, the geopolitical tension was escalating throughout the week between the US and Ukraine, ending with a dramatic press conference between both of them, which thing escalated very badly. That's affected the momentum stocks and the Bitcoin, so the pressure continues on them. We have seen some dropping by even 15 to 20% last week, on top of what they dropped the week before. Something very strange happened on Friday. We have seen some recovery in the last 10 minutes. So in the last 10 minutes, the market went up by 1.5% in just 10 minutes before the close out of the session. I'm very skeptical on this rebound. So we need to watch next week if some people are really buying the dip and if this recovery is going to continue next week. I'm ready to go in if this recovery will continue. Now let's go to the details. The S&P 500 dropped by 1% in February. Nasdaq dropped by 3.5%. The start of the week was the equal weight, the S&P equal weight, which means that the drop was mainly in the top companies. February is now negative in all the indices, minus 1.5% in S&P, minus 4% in Nasdaq, minus 5.5% in the Russell 2000. The least dropped was the S&P equal weight. Year to date, the picture is split. We have 1.3 gains in S&P, 2.4 minus negative 2.4 in the Nasdaq, and the equal weight is the star, which is at 2.6. This is telling us that the drop is really in the mega cap, and the rest of the 493 stocks are doing very well. Only the Max 7 are doing bad. Let's watch out that we had a rebound on the last 10 minutes on a Friday. So if you've seen this graph below, all the indices went up on the last 10 minutes. Each bar here is 10 minutes. So the market went up by about 1.5, 1.6% only in the last 10 minutes. So I'm very skeptical on this rebound. Maybe we'll see this continuing next week. We still need to see what will happen. But I'm very skeptical. But I'm ready as well to go in if the market continues the rebound. Maybe some people are buying the dip because there are some stocks with really good prices. And some stocks dropped by about 20-30% in the last 2 weeks. So the prices become very appealing right now to go in. Last week we had some bad reports. This was mainly the reason for the drop that we have seen last week. So we have seen that the initial jobless claim came higher than what is expected, and we have seen that the GDP came at 2.3. It is as per expectation, but lower than the previous read of 3.1. And we have seen as well that the core PCE is going higher versus the previous read, 0.3 versus 0.2 on month-on-month basis. The only good news was in the PCE, it's as per the expectation, but it's less than the previous read, which is good news that the inflation is moderating. Let's move on to see the drop that happened last week in the momentum stocks. So you can see that there are several companies that were hit hard during last week. So we have seen some companies going down by 20%, like App. There was a short recommendation on it to short the stock. Duolingo went down by 20%. It had a very bad results. And PLTR is still continuing the correction that it has seen the week before with minus 13%. Coin and MSTR are linked to Bitcoins and HOOD as well. They are still going down. And we have seen SEG, VST, the energy stock, and they are correcting after the DeepSeek. They are now below the bottom that they had in the DeepSeek, and also CVNA, and the rest are correcting because they went up so fast and so high during the past period. If you look on the right table, we have seen some rebound in Chipotle, in SFM, in Walmart, CVNA. So all of them are going up. Maybe this means that the decline has stopped. We still need to see that next week, but be ready to go in if you have seen similar action in these stocks next week, and also on the momentum stocks that were going down last week. So last week we have seen a continuation of the previous week drop. Actually, all the days were down except Friday, and Friday was down as well until the last 10 minutes. Then it started recovering fast in the last 10 minutes. On the number of the new high, new low, we have seen now that the new low is getting much higher. So they went up from 264 to 642, 672. This is a bad news for the market, that there are more companies that are making new lows now. And we have seen a drop in the number of companies below the simple moving average 50 from 5,100 to 4,188. So it's a huge drop by 10 percentage point, and the same we have seen here in the companies below their moving average 200, dropping to 51% from 55%. So all of these were bad news last week. The winning sector last week were the financial, healthcare, and consumer defensive. Financial is now at 7.14 year-to-date gain. It was 4.69. Healthcare is at 6.95%. It was 5.78, so it is winning. And also the consumer defensive was 5.11. This week it is 6.66, so it is still winning. The losing sectors are the technology. It went down from plus 0.88 to minus 3.42. So that's why you see the Nasdaq going down by 4% in February, 3.5% last week. The consumer cyclical as well, and the industrials are the bottom of the list. On the capitalization, everything is going down, especially on the mega. It was 1% gain last week. This week it is minus 1%. So it is mega technology that are driving the market down. Large is still holding. It went down a little bit, but it's still the winning sector this year to date. So if you want to be in the winning sector, you go to the large capitalization, and you go to the financial, the healthcare, and consumer defensive. Avoid the technology and consumer cyclical and the industry. Moving on, next week on Tuesday we have the deadline for Canada and Mexico for tariff. So let's see what will happen, if they are going to get an extension or the tariff will start. Friday we have the payroll. We expect 156K and the job report at 4%. So let's see the outcome of that. And now we are close to the end of the results season. So probably this week is going to be the last week for the results strategy. Next week we have Target, CrowdStrike announcing on Tuesday. And on Thursday we have Broadcom, Costco, and Gap. And for the trading strategies, I'm watching now the US stocks. I'm ready to buy the dip in some hammered stocks if they rebound next week. And also there is another strategy that we can use for US stocks, which is there are some stocks that going against the downward trend. They didn't go down throughout the last 2 weeks. They are showing some strength. There is a reason for this strength. We don't care about that. But what's important is that they are going against the trend. For gold, silver, the EU ETF, and Chinese stock, they were having correction last week. So watch out. This correction might continue. If it was just a temporary correction and then they are still resuming up, so you can still go in and increase your position in these stocks. Thank you very much. That was all for this video. If you like the video, please press like and share it with your friends. Subscribe to the channel And if you have any question, please put it in the comment. If you want any special video, please also put it in the comment. You can always email me at info@thepersonalfinance.com. And just a reminder, this video is for educational purpose and should not be considered as a financial advice. Any investment you make is at your own risk. Thank you very much and have a great week and have a profitable trade and Ramadan Kareem to all.